The worst cryptocurrency crash is coming. Bitcoin, Ethereum, and other digital currencies are in a bubble, and when it pops, it's going to be ugly. Here's what you need to know about the impending crypto crash, and how to protect yourself from it. Let's get started. Please like, subscribe and turn on the notification button to keep supporting our channel. 1. The crypto crash is coming. What you need to know. The crypto crash is coming. Investors have seen the warning signs for months, and now it seems that the long-predicted market crash is finally here. The question now is, what do you need to know in order to survive the crash? Here are a few things to keep in mind. 1. The crash will likely be widespread. While it started with Bitcoin, the crash is likely to spread to other cryptocurrencies as well. This is because the market is still very interconnected, and a decline in one asset can quickly lead to a decline in others. 2. The crash could be very severe. Prices have already fallen sharply in recent weeks, and they could continue to fall much further. In fact, some analysts believe that the market could eventually lose up to 90% of its value. 3. The timing is unclear. It's hard to say exactly when the crash will happen, but it seems to be unfolding fairly quickly. It's important to be prepared for the possibility that prices could fall further and faster than you might expect. 4. There could be an opportunity in the aftermath. Once the dust settles, there could be some good buying opportunities in the market. This is because the prices of many assets are likely to be greatly reduced, making them more attractive to long-term investors. 5. You need to be prepared. If you're invested in cryptocurrencies, it's important to have a plan in place in case of a market crash. This means knowing how much you're willing to lose, and having an exit strategy ready to go. The bottom line is that the crypto crash is here, and it could be very severe. However, if you're prepared, there could be opportunities in the aftermath. 2. What caused the crypto crash? The crypto crash was caused by a variety of factors. First, there was a general loss of confidence in the crypto markets. This was exacerbated by a number of high-profile hacks and scams, which shook the faith of many investors. Additionally, regulatory uncertainty and crackdowns in some countries contributed to the sell-off. Finally, the overall bearishness of the wider financial markets also weighed on crypto prices. 3. Who is to blame for the crypto crash? When it comes to assigning blame for the recent crypto crash, there are plenty of people and institutions that could be held responsible. However, there are a few key players that stand out as being particularly culpable. First and foremost, the blame must be laid at the feet of the exchanges that allowed for the rampant speculation and price manipulation that characterized the crypto boom. These exchanges enabled investors to trade on margin, using leverage to amplify their gains or losses. They also allowed for the creation of complex financial instruments like derivatives and futures, which allowed investors to bet on the direction of the market without actually owning any cryptocurrencies. These practices created an incredibly risky and volatile market, and when the bubble finally popped, many investors were left holding the bag. Another group that must shoulder some of the blame are the developers of the various cryptocurrencies. In many cases, they failed to live up to the hype surrounding their projects, and their coins ultimately fell victim to the sell-off. And finally, there are the investors themselves. Many people jumped into the market without fully understanding the risks, and they are now paying the price. Of course, it would be unfair to lay all the blame on any one group. The truth is that the crypto crash was the result of a perfect storm of factors, and there is plenty of blame to go around. For what does the crypto crash mean for the future of cryptocurrency? The cryptocurrency crash of 2018 was a major setback for the industry. Many investors lost a great deal of money, and the value of many cryptocurrencies fell dramatically. The crash was caused by a number of factors, including a general decline in the markets, regulatory uncertainty, and a number of high-profile hacks and scams. However, the crash does not mean that the end is near for cryptocurrency. In fact, many industry experts believe that the crash was simply a setback, and that the industry will rebound in the future. Here's a look at what the crypto crash means for the future of cryptocurrency. There's no doubt that the cryptocurrency industry has been dealt a blow by the crash of 2018. However, it's important to remember that the industry is still in its infancy. And, while the crash was certainly a setback, it's not necessarily indicative of the long-term prospects of cryptocurrency. In fact, many experts believe that the industry is still very much in its early stages, and that the long-term prospects are still very positive. One of the main reasons for this optimism is the fact that the underlying technology of cryptocurrency is still very strong. Blockchain technology is incredibly powerful, and it's still being developed and improved. Additionally, the adoption of cryptocurrency is still relatively low. As more people become aware of cryptocurrency and its potential, adoption is likely to increase. This, in turn, could lead to renewed interest and investment in the industry. Of course, there are still a number of challenges that need to be addressed in order for the industry to fully rebound. These include regulatory uncertainty, the need for improved security, and the need for wider adoption. However, it's important to remember that the industry is still young, and that it has a lot of potential. The crypto crash of 2018 was a major setback, but it doesn't mean that the end is near for cryptocurrency. 5. How to protect yourself from the crypto crash. When the crypto markets crash, it can be a terrifying experience. The key is to remember that crashes are a natural part of the market cycle, and they present an opportunity for those who are prepared. Here are some tips to help you protect yourself from the crypto crash. 1. Diversify your portfolio. When it comes to investing, diversification is key. This is especially true in the volatile world of cryptocurrency. By spreading your investments across different assets, you can minimize your risk and protect yourself from a total loss in the event of a market crash. 2. Have a long-term outlook. If you are investing in cryptocurrency, it's important to have a long-term outlook. This is because the market is highly volatile and short-term price movements should not be your main concern. Instead, focus on the long-term potential of your investments and hold on to your assets even when the market is down. 3. Use stop-loss orders. A stop-loss order is an order to sell an asset when it reaches a certain price. This is a useful tool in the event of a market crash, as it can help you limit your losses. By setting a stop-loss order at a certain price, you can ensure that you sell your assets before they lose too much value. 4. Stay informed. In the ever-changing world of cryptocurrency, it's important to stay up to date with the latest news and developments. This will help you make better investment decisions and avoid being caught off guard by a market crash. 5. Have a plan. When it comes to investing, it's important to have a plan. This means knowing what your goals are and how you plan to achieve them. Having a plan will help you stay focused and disciplined when the markets are volatile. By following these tips, you can protect yourself from the crypto crash and come out ahead in the long run. There is no doubt that the cryptocurrency crash is coming, and it is going to be worse than anything we have seen so far. The prices of all cryptocurrencies are highly volatile, and there is no telling when the bubble will burst. When it does, it is going to have a devastating impact on all investors. But on the bright side, it will be the best opportunity to buy the dip, because cryptocurrency will be here to stay and will hit another all-time high again once bull market is back. As Warren Buffett said, "Be fearful when others are greedy, and greedy when others are fearful." Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.